Hello everyone, welcome to Tesla News. Before we go into today's episode, let's look at how Tesla stock is performing today. Tesla opened today on a strong note at $757.98, and at the time of writing, the stock price is at $759.91. With that being said, let's move on to today's news. Tesla stock has received a new street-high price target of $810 per share from Morgan Stanley on a clearer path to selling millions of electric cars per year. Tesla stock is up 2% in pre-market trading today, and there are a few things that could be driving the price higher. First off, while too close to call for now, the Democrats are leading in the two runoff elections for Senate seats in Georgia. The results could have an important impact on Tesla since the Democrats take control of the Senate if they win both seats. And with control over the House of Representatives and the White House already, they would be likely to be able to pass a reform to federal EV incentives, which is likely to benefit Tesla. Furthermore, Tesla has also received a new Wall Street high target price. Morgan Stanley analyst Adam Jonas was out with a new note to clients on Tesla last night in which he increased the firm's price target on the stock to $810. The analyst sees a clearer path to Tesla reaching millions of electric vehicle sales per year and increased his 2030 volume estimate from 3.8 million vehicles to 5.2 million vehicles. He wrote in the note, quote, "In our opinion, Tesla is still the best positioned company in EVs and AVs under our coverage due to its people, its technology, business model, and access to capital. Furthermore, it is important to note that the company has no entanglement with the environmental liabilities that burden its legacy competition. Put it all together and we believe Tesla's business model can unlock recurring mobility services revenue faster and more profitably than the competition." End quote. Jonas and Morgan Stanley were early fans of Tesla on Wall Street, and Jonas was even referred to as a Tesla cheerleader by some. However, Jonas turned negative on Tesla, and Morgan Stanley stopped recommending to buy Tesla for years until recently. The analyst started recommending Tesla again late last year, right around the same time that Tesla announced a $5 billion capital raise, which Morgan Stanley participated in. Also, we all know Tesla short sellers lost close to $40 billion in 2020 and 2021, started with big losses for them. In the first trading session of the new year, they suffered losses of more than $1 billion. Despite all the difficulties associated with the current pandemic, 2020 has been an incredibly positive year for Tesla. The effort that the company's put in over the years has begun to pay off. Tesla continued its rapid development, building new factories and increasing production capacity, leading to stronger and more widespread investor confidence. The company's share price continued to rise, making it not only the most valuable automaker in the world, but also the sixth largest company in the United States by market capitalization. Parallel to the company's success, 2020 has been a devastating year for Tesla short sellers, who lost approximately $40 billion according to S3 Partners. "There's nothing that compares to it that I can remember," said Ihor Dusawinski, managing director at S3. In 2021, short sellers continued to make the same mistake and, according to the facts, started the year very badly. Tesla shares rose 3.4% to $729.77, a record high at the close. Intraday, their value even reached $744.49, which equated a market capitalization above $700 billion. At the same time of this writing, TSLA shares cost of $736.74. This is clearly something short sellers did not count on. Dusanowski tweeted that Tesla's short interest is $31.20 billion as of January 4th. This corresponds to 44.22 million shares shorted, or 5.83% of the total outstanding shares. He also stated that TSLA short sellers have already lost $1.07 billion in the first session of 2021 alone. The Tesla stock rally continues for a number of reasons. This explosive growth is underpinned by Tesla's ability to meet its 2020 delivery targets. On January 2nd, the company reported that it delivered 500,000 vehicles, exceeding Wall Street's expectations by average consensus. The company has already reported 5 profitable quarters in a row, and investors have every reason to believe that Q4 2020 will also be profitable. In December, Tesla was included in the prestigious S&P 500 index, which testifies to the great confidence in the manufacturer. The company has and is implementing a strong roadmap. Tesla short selling is a very bad idea, so the numbers of shares held by short sellers is gradually decreasing. However, at the moment, Tesla continues to be the largest domestic and worldwide short in position, which will likely cost short sellers even more. Moving on, we have some news on Tesla's full self-driving. Tesla vehicles that have gained access to FSD beta show impressive capabilities. They allow vehicles to drive without driver intervention, navigate difficult sections of the road, make difficult turns in busy streets, and avoid collisions with objects that suddenly appear on the road. Already, Tesla vehicles that use autopilot are 10 times safer than other vehicles that are driven by humans. The use of FSD is likely to further increase this gap and make driving a car as safe as possible. The main task of FSD is to deliver passengers from point A to point B without the intervention of a human driver in the driving process. This will free up a lot of time and energy that people now spend driving. FSD beta seems to be showing excellent results in achieving full self-driving. The owner of FSD beta Whole Mars Catalog /YouTube shared a video in which he made a 6-hour journey with absolutely zero human driving. In the description, he indicated that he was traveling from Los Angeles to Silicon Valley without any intervention. The car started at SpaceX's Los Angeles Hawthorne headquarters and arrived in San Jose. Along the way, there was one stop at Kettleman City to recharge, which required about 1 minute 15 seconds of human control over a 6-hour drive. The Whole Mars catalog emphasizes that the fact that FSD beta made the trip without driver intervention suggests that it was more than just luck. He also pointed out that, at the moment, FSD beta is not yet perfect and makes some mistakes, but nevertheless, the software is getting better, and the quality of the function is already much higher than it was before. Early, Tesla CEO Elon Musk said that before Tesla's FSD reaches level 5 autonomy, it will need a series of updates that will improve it. Watching such videos, one gets the impression that this will be achieved in the near future. A few months ago, no one could even imagine that a car could drive 6 hours without driver intervention, but now it's become a new reality. Moving on, Tesla has released a new map of its upcoming Supercharger stations, adding many new planned stations to the network, removing others, and updating timelines in the process. The Supercharger network is one of Tesla's 2 charging networks along with the Destination Network. While the Destination Network focuses on providing charging solutions at destinations like hotels and restaurants, the Supercharger network enables long-distance driving with fast charging stations positioned along major highways. Many stations are also located in cities to enable EV ownership without charging at home. With the release of the Supercharger V3 in 2019, Tesla Superchargers can charge Tesla vehicles at up to 250 kilowatts, which can add 1,000 miles per hour of charging. However, the vehicles can only sustain that kind of power at lower states of charge, and most charging sessions will last 30 to 45 minutes. Tesla recently announced that it deployed its 20,000th charger in the Supercharger network. At the end of 2020, Tesla had over 20,000 charging stations at over 2,100 supercharging stations around the world. On its Find Us map, Tesla shows current Supercharger locations along with upcoming planned locations. The map is updated every year, and it's a good tool to better understand Tesla's plan for the Supercharger network over a 1 to 2 year time frame. Tesla has now released its 2021 update to the map, adding many new stations in the process, as well as removing some that were previously shown as planned and updating the timelines for many more stations. It's important to note that Tesla often puts a planned station on the map that never happens, as each station is dependent on Tesla finding a property to deploy the station, making an agreement with the property owner, acquiring the right permits, and securing a connection with the local electric utility. There are many things that can stall a particular supercharger project, but in general, this map is representative of Tesla's expansion plan for the Supercharger network. The automaker appears to have added many planned stations in key markets where its fleet is growing, like in California, the Northeast, in China, and in some European markets. The gray dots represent planned stations, while the red dots are superchargers that are currently in operation. Thanks for watching today's episode. Please subscribe, and I'll see you in the next episode.